Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So the Fed is behind us, and to make a long story short, it felt like it was a hawkish hike. That's what you're probably going to hear in the media, meaning the hiked rates, and they also talked about how they're going to stay the course for at least September. Fed funds rate doesn't believe it. I think they're at 20% or less for September, and then even not even 50% for December. But throughout the course of the afternoon, some of that hawkish trade wound up showing its face. And what's the hawkish trade? Lower gold and higher banks. And then some of the small caps rallied back, and so did the spiders and tech that looked as if they were going to close in the lows, turned into a doji. So once again, just a big dance as we head into quad witching and the end of the quarter, where it seems like the fix is in. So you got to keep dancing around these levels, and hopefully we get you prepared enough with these levels so you can continually make cash flow and tactically make money without that much risk. So anyway, you go to the chart of the S&P cash. Overall, still hanging in there, right? We started the week thinking about, are we going to hold the 21-day moving average? Well, we held it here, held it there, and then today it looked as if they were going to break us back below the 8-day, and PS closed right back in the upper end of this upper channel. That's on top of this upper end of the upper channel. Here is your breakout above this prior resistance, and basically held the 8-day this entire way. Loose and wide day, the day that tech kind of got a little crushed, but overall, look where the S&P cash is, right near the highs. So being very resilient. If you take a look at the diamonds, it's pretty humorous actually. Diamonds on the highs of the year, all-time high. You're going to read the newspaper saying the Dow Jones made an all-time high today. And then you're also going to read in the news how, a congressman was shot and how you had another, crazy day in the media, et cetera, et cetera. But all in all, that's why you turn the TV set off, because if you did, you would say, hey, look at this chart of the diamonds. Look how it broke above this area. Look how it stayed above the 8-day. Wow, look at the relative strength. The S&P came all the way down to the 21-day, and the Dow / the diamonds stayed above the 8-day and now is already at all-time highs. So, that's why you try and tune out the noise. On the flip side, you have tech. At least we get prepared, and we try and figure out what to do. We talked about last time we had a momentum break here. You had a small red dog reversal. The first day took back more than half of it. If you remember, it came back and we were talking about if the sellers have any control, it should reject price around here, or maximum the 8-day. Within 2 days it was above it. Within 3 days it was comfortably above it. Then you were at highs. This time you had a big wide range bar where another momentum trend was broken. Here you had your calculated long with the red dog reversal. Gave you a little bit of follow through. I took that trade. I said I'm only looking for a quick little bounce back. And then if you remember, we put together the resistance zone. Okay, so it hit that resistance zone, came back below this prior high, and gave you actually a good short today before coming all the way off the lows. And now it's still, kind of the active bear's balls to lose, bear's ball to lose. But all in all, macro-wise, the bulls have been, in complete control, and still, above the 8-day on the weekly, and not even at the 21-day, which you could still see, and still the more macro bulls and tech are definitely in control. It's just a matter of whether you trade for cash flow and alpha every single day to make a living. Then you have to know about these type of things. The IWM broke below yesterday's low, but what did it do? It held the 8-day. That's why I try and give you two levels. If you're super duper active, you want to have two levels, because sometimes they shake the tree. Sometimes you can get out when it breaks an upper active level, but then you can get back in when it tests a more compelling area, like the 8-day moving average, which is what was below. So you take a closer look here. All in all, as weak as the IWM was today, still looks pretty darn good if you drown out the noise. It's hard to drown out the noise, but look at that right there. It held the 8-day. So it got below this, which was 141.47. You said, I'm going to get rid of it if it breaks below yesterday's low, but I'm looking to buy it around the 8-day. Well, you could have got it cheaper than there. At this point, do I think it's going to break above this and just go? I don't know, but still hugging the 8-day moving average above the 21-day. So if you're tactically short here and there, you better be careful. And if you're looking to buy dips, just make sure you don't do it too early so you don't get stopped out. The IBB, I guess in that little flush, I wound up saying, hey, you know what, I'm going to be very tight on my stops, and I'm not in it right now. For those of you who are looser, you're probably giving it to 291, so you're still long. If that's the case, you might even enjoy a move where it does look as if it's getting ready to go back towards 300 plus if the market's any good. So once again, I don't know why I was so tight on it, but anyway, here it is looking fine. So sometimes I'm just giving you guys the offensive plays, and you guys get to run with it however you want. As far as other tech, I actually made my money short today in Facebook. Why was I short Facebook? Because I said to myself, hey, look at this wide range bar break here. Look at this red dog reversal there. So people can come and make money. Then there's your follow through, and then I figured, why don't I try and short some strength into 150, 150 to 152. Why that area? Because that's where it broke down from. And PS, it gave us a decent trade here today. It took some time, but at this point I didn't go out short, but you have a loose and wide doji, so it needs a little time to figure out what's next. Amazon, I was long overnight, got rid of it when it was up $3-4, didn't short it. It looks as if it's just trying to figure out what's next. It looked worse about a half an hour ago, but still kind of hanging in there, I guess, still below this. So like last time, you had this wide range bar. Again, within 3 days, it was back at the highs of the year. Okay, this is within 3 days, and it's not. So it's just taking more time and needs a little bit, more price discovery before you start adding on strength, etc. But at this point, I guess you can't get too bearish if it holds above this little 2-day mini floor. We shall see. I'm not long Amazon. I've been long Amazon the last 2 nights. And I've also been long Apple the last 2 nights, which I'm not long tonight. Because, Apple, I just showed you, other stocks that came back up to retest the 8 and 21 day, which were broken lines, okay? This one couldn't really even get up and retest the 50 day. I guess it wants all these moving averages to curl in before it gives it a test. Either way, though, there was a bit of a tactical bounce, and now it's turning more into like a bear flag here. So the longer it stays below this, the higher the probability it can continue down. So this is not giving me any compelling reason to be long it overnight. The only other, I took it long this night. It was up $1 and change. Took it home last night. It was up 40, 50 cents, being able to sell pre-morning call. But at this point now, no position. I'm going to wait and see. BABA also, they have all this rebalance type of stuff. Just consolidating this big move. Remember, baboom, right here. That was a great trade for us. We were long, so it looked great above the 8-day moving average. And now it's a little bit loose and wide. Still looks fine. It's holding this gap. It would still look fine even if it came in a little bit. But these 5 red bars where they keep selling strength doesn't give me conviction to be long it overnight. So I'm just going to sit and wait still. And the other Chinese internet names were pretty much sold into that BABA move. So at this point, let them prove that they could also hold their gap before you start allocating some big time money to them. This Momo actually doesn't look so hot. It's, looks like it's, all these things are on support. I don't like to buy things on support, especially overnight. I'd rather wait to see, what happens in the morning and get some price discovery so I have something to gauge it against. And when momentum names are below the 8 and 21-day moving average like this is, okay, it's not a position to sit and hold. Above it, you try to do it. Below it, you be careful, just in case. Lastly, the banks. I was long them, and there was one move around, I don't even know, 245 that, that took them all red, and it looked like the market was going to fall apart when the S&P was, or the spiders were down $110 and got me out. Then I got back in my seat, and they looked just fine. So if you had to be in something, I would think the banks look as if, they're trying not to believe that the Fed's going to continue to raise, but the banks are saying maybe they will. We talked about being long versus this the little 219 area, and if you didn't, okay, if you got in today when it was red for, a good half an hour after the Fed and then turned green, and now looks as if, it's going to be testing this 230 area, nice candle, looks okay. Some of the other ones look decent too. I'm not in them, I just wasn't in the mood. This Bank of America looks, like a nice little bull flag, held where it had to. I always list 2 different spots. One, where it actively could be used as a stop, and one where you could trade against if you're a little bit looser. And this held that area, and now you'll see whether or not there's enough juice for it to take this out. We shall see. So in conclusion, there's been some decent money playing these ranges. The market's still trying to prove what's next. At this point, tech is still on the neutral to weaker side on an active basis. On a stronger basis, actively, the Dow's been the strongest. Today, maybe on a stronger basis, you have the banks, taking the active ball back. The IBB still looks pretty good. The Russell looks like it needs a little bit more time, but it hung in there. The XLE, downtrend, right? Every time it's gotten to this 50-day moving average, it's been a sell. Sell, Mortimer, sell. And that's what it's been right here every time it gets to the 50-day. So I guess, maybe see what happens here tomorrow, but the only time to buy it is in the hole. So in conclusion, again, hopefully you navigated today well. There were definitely some things to do, some areas to make money. You had to be very tactical and very prepared, and that's what we try and help you do. See you tomorrow morning. Bye-bye.